Live from the New York Stock Exchange, you're watching Financial Buzz Weekly. I'm Elena Bay, and here's a review of this week's market news. To begin the week, U.S. stocks drifted little changed on Monday after the market's best week of the year. While the broad market was virtually flat, some of the momentum names, including Tesla Motors, Pandora Media, GoPro, and FSLR, fell sharply. The National Association of Realtors had pending home sales rise 0.3% in September. This was boosted by an improving jobs market and low mortgage rates. On Tuesday, stocks rallied as Federal Reserve officials started their two-day meeting. Investors embraced corporate earnings, but separate data showed durable goods orders declined in September. The Case-Shiller home prices showed slower growth, a negative for homeowners, but a key positive for home sales. Consumer confidence surged to a new recovery high of 94.5. The index was last this strong in October 2007, right at the beginning of the Great Recession. On Wednesday, stocks closed slightly lower after the Fed confirmed that it's shutting down the $4 trillion bond buying program because the economy no longer needs as much help. The central bank kept its language on keeping benchmark interest rates low for a considerable time as it ended its two-day meeting. On Thursday, jobless claims moved higher to 287,000 in the latest data, but the average is still at recovery lows. Visa and MasterCard rallied and led to huge stock gains after both card payment processors released higher than projected profits. In addition, U.S. GDP grew at 3.5% in third quarter, stronger than the market consensus. Friday, it's one happy Halloween for the stock market, with the Dow hitting an intraday record and the S&P not far behind. The Bank of Japan expanded its stimulus, personal income advanced 0.3% in September, and consumer sentiment extended its recovery best performance in October, coming in at a final 86.9. Now let's take a look at some company highlights. First, social media giants Facebook and Twitter. Twitter was able to match earnings estimates this week and even beat revenue forecasts, but that wasn't good enough. The company offered disappointing user metrics and shares of Twitter suffered. Facebook lost more than 6% to $75.86 the day after it announced aggressive spending plans. Facebook also projected a slowdown in revenue growth this quarter. Both social networks are spending serious cash to meet high growth expectations. But it looks like Facebook can handle the ride. Twitter, on the other hand, may not. Lakeland Industries recovered nearly 23% on Thursday, thanks to reports that Lakeland has booked 1 million orders of their protective gear due to the ongoing fear of Ebola. Lakeland also stated that the true impact from Ebola-related orders will not be felt until Q4 of fiscal 2015. BP, the third largest oil producer in Europe, reported that net earnings fell a staggering 19% to $3 billion. BP was the first global oil company to give a glimpse of energy industry's profits hurt by oil's decline. Shareholders of Chiquita, the banana producer, said no to a potential acquisition by Irish produce company Fives. So the brand will not go to Ireland, but instead it will move to Brazil. Chiquita said it's now in talks with the Brazilian orange juice supplier and a holding company. The banana producer on Monday agreed to be sold to the Brazilian companies for about $681 million. Thanks for watching Financial Buzz Weekly. I'm Elena Bay. Happy Halloween, everyone. We'll see you again next week.